Hello, everybody. I promised this video to many of you quite a while back, a couple weeks back now. I apologize for my tardiness. I have been waiting for some of these updates to finalize so that I could make this video. I'll show you why in just a second, but I'm going to explain a very simple way to find trades using these tools. The idea behind this is once you get your head around this very basic concept of how these tools work, you'll sort of understand why they were made, what they're doing, and then you'll be able to extrapolate all kinds of other things from them. And I'll make more videos going forward and sort of explain more advanced ways to find trades and different ideas. But to be honest, with what I'm going to show you in this short video, you could be very profitable if you just took these trades. Very, very honest. I take all the trades that I'm about to show you, at least most of them. I'm not awake for all of them, but I fade a lot of I fade scalp, I catch turns in the market, all kinds of things. And I'm going to show you those two techniques in this video. A quick backstory, because I get a lot of questions about it. These tools have been in existence since about 2007 in one form or another. They have been highly modified over the years. And this last iteration, this round of tools that you guys have access to, is by far the most accurate. We have predictive algorithms mixed in now and all kinds of things. Very, very accurate metrics, reading the markets now. Like I said, this is my default view. I don't use the BVQ matrix because the BVQ matrix was designed to help people understand the currency matrix. So if the fact that the dollar is going long, let's talk about the euro dollar, for example. If the fact that the dollar is going long, that sends that currency pair short. If in your brain that makes perfect sense, you don't need the BVQ matrix. You really don't. If that concept, the base versus quote, that teeter-totter concept, it makes perfect sense to you, then don't worry about the BVQ matrix. For a lot of new traders, that's very confusing. And so if the currency matrix is giving you fits, use this instead. It'll make more sense. And then over time, you'll probably be able to extrapolate out and say, okay, now I understand what's going on with the currency matrix versus the BVQ dashboard. That's why we made that. It was to help people understand the relationship between the two. Also, the Forex trend matrix. This is another sort of shortcut for new people using these tools. And I don't say new people like a derogatory thing at all. We knew that we needed to find a way to help people with the learning curve on these tools. And this is one of those tools. I can extrapolate most of this information from the tools that I have up. Right, I can look at the scalping dashboard, and it's not primarily just a scalping. I'll explain that in a minute, but it kind of got that's sort of its nickname over the years, so it kind of stuck. So we've kept it, but it's more than just a scalping matrix. But I can extrapolate most of this data just by watching what's going on over here. But this will help traders understand the trends within trends when shorter time frames are fighting the longer term time frames, right? If you know that the trend is long, for example, and it's pulling back to the short side, think, well, it's going to bounce sooner or later. When is that? You can sort of use this to help you time when that might happen. Maybe I'll explain that in another video. For now, we're going to stick to something very simple. I always refrain from the phrase idiot proof, but these two particular styles of trading are fairly unbreakable if you follow the rules. It's pretty simple. We're going to go to the live charts now, and if you don't know how to get to those, you just open up the matrix trade signals and you click on here. We're going to go to we'll go to the euro dollar first. So the first thing we're going to look at, well, okay, let's talk about this for just a second. What we're going to discuss, I'm going to actually ignore 3 of these metrics for now. We're just going to talk about the PBT data and the global trend value. A lot of times, if you're on TradingView, if that's how you found me or you found the tools or whatever, and you hear me spat out in chat, it's going to bounce here pretty soon, and sure enough, it bounces, and everyone on chat is, I usually get PMs. How'd you know that? Well, all I'm doing is looking at this tool. It's very simple. When the PBT values get to minus 9.9 or plus 9.9, it's going to consolidate. I'll show you what that looks like on a chart, but not long term, right? PBT is very short term. We're talking 10 pips max, right? But it's going to bounce. Sometimes it'll go more than that, but you can only bank on about 5 to 10 pips depending on the currency pair and its volatility, right? So the global trend value, though, exact same concept, but longer term bounces, right? So think short-term scalps, long-term scalps, basically. is the best way to explain it, or swing scalps, whatever you want to call it, right? We'll ignore this tool for this video. Literally all we're going to do. So if you wanted to just do this, you're good to go, right? This is all you have to watch to catch these trades. So the basic idea is we're fading price action. Price action gets overextended. The market never goes in a straight line unless it's news or like, Boris Johnson says something stupid over the pulpit, which he does frequently. That will drive the market crazy. But generally speaking, under normal market conditions, these tools work very effectively, right? Never get married to a trade. Be willing to take a loser, right? If it runs through your entry. And each currency pair, right? We track all 17 currency pairs down here. But each currency pair kind of has its own personality, and it takes a little bit of practice to get to know. Like the euro dollar, it turns pretty much on a dime. When it's minus 9.9 or plus 9.9, it turns almost immediately after. And that's pretty much true of most of the USD crosses except for the pound. Most of the pound crosses, they will give you like a secondary push after it hits minus 9.9 or plus 9.9, especially like the pound yen and the pound Swiss and the pound Aussie, actually. And lately, even the pound dollar with all of its volatility. So the timing there is a little quirky, but let's look at a chart now. So I'm going to open up a euro dollar chart. First thing we're going to look at is, let's talk about the global trend data first. By the way, this is how you show this on a chart, if you ever want to look at this. And over the weekend, sometimes the charts get a little squirrely. It's because the data is not updating. And so if you zoom in and zoom out a lot, you'll get these weird, like bars will be missing and stuff. It won't do that when the markets are live. It's just over the weekend. But right now we have, if we uncheck this, they disappear. Right now we're looking for spikes in the global trend data. And what this does is every time there's a value of 9 plus or minus 9 in either of these two metrics, right? Right now we're looking at the euro dollar, and specifically we're looking at this purple line, the data. So whenever you see a marker on the chart, it's hit either the bottom of the red, or sorry, the top of the red here, or the bottom of the green here. It hasn't hit the entry mark yet, and that's kind of the way it's designed. It's supposed to give you an advance warning, right? So we had the global trend value, and I was watching both of these trades. I took both of these trades. Nobody thought that the euro dollar would fade here. Everybody was sure that it would keep going because of the momentum it had. I shorted it, especially when it broke 1900. If you guys were watching in the market, everyone thought, oh, it's gone, right? It's going to go to 19. I think everybody thought 1960 at least, right? And I knew because I was watching my tools that it wasn't going to make it to 1960. And so if we zoom in just a little bit, oh, and it's doing that auto thing. Gotta zoom out. So if you haven't figured out these charts yet, auto zoom when you zoom in, it changes the time frame automatically, which is kind of annoying, I think. But all you have to do is uncheck it, and now it won't do it. So now we can zoom in and really get a close shot on this. What happened was, if you were watching the tools, the global trend value hit 9.9 about right here on this wick, and I actually went short right when it hit 9.9 because it's euro dollar, and it usually does it right when it hits 9.9. And sure enough, it faded. I got out way too early. I closed my trade right around here somewhere. I think when I never hold it long enough. That's one way I need to improve my trading. But you'll find that if you follow these tools, your win ratio gets so high that you start to get a little sloppy. You don't hold trades as long as you're supposed to. But it hit 9.9 about right here, and it was a nice turn in the market. Similarly, over here, this was on the 17th. So what was that? Wednesday, I believe. We had that spike where it was down at the second time. No, that was after FOMC. That's right. So it was at the bottom of that FOMC run, and everybody thought, okay, it's the bears are in control now. It's over for the bulls. And I thought, no, it's going to bounce. It's not quite time yet. And about right, almost at the bottom of this wick, it hit 9.9. It was a beautiful entry, and I went long as I did, and I think I was the only one at the time in chat that was long, but I was long, and normally I probably would have killed it somewhere up here, but then we got this buy signal from the system, and I knew that we would get at least a little more out of it, so I held it a little bit longer, and I actually wrote it up to about here. That was a fantastic trade. So that is the basic idea, right? I'm making this a lot longer than it needs to be, but whenever the values this purple line, whenever it gets to pegged at the top or pegged at the bottom, you take the trade in the opposite direction. So if it's pegged at the bottom, you're going to buy it. If it's pegged at the top, you're going to sell it. And if you click on these, it'll tell you it hit +9 2 times on this candle, right? And there's a 30-minute timeout. So it will never, once a value is triggered, it waits 30 minutes to signal it again. So basically it stayed above 9 for over an hour. What you'll find when you're watching the global trend value, once it gets into the dark red or dark green, it moves really slow. Yeah, you have to be really patient, and don't get in early. Don't think it's gonna, and you'll see it. Sometimes it'll get up here and it won't quite get to 9.9, and the market will turn and you'll feel like you missed a trade. But I mean, you really didn't. You were just patient. You followed the rules. You're not going to catch every turn in the market. But when you do get the signals, you have the confidence to know, okay, this market's going to turn. What I tell new traders is wait for, because there's usually plenty of market momentum to chase once the market turns. And I usually tell people to find a reason for the market to turn. Don't just, when you first begin, don't just take a trade on blind faith, because you might not. Like I said, each currency pair is a little bit different. So I know, like for the pound pairs, for example, when the global trend value hits 9.9, I let it run like a 30-minute ATR. And if you want to know what that is, you open your ATR matrix. I will for example, I'll let the pound dollar run another 15, 20 pips before I go short if it's going long, or go long if it's going short, because I know that it's going to score it a little further after it hits that value. And I've just learned that from watching these tools over the years. So this is a system that requires an epic amount of patience, because you can see that let's go back and zoom out. Oh, we are zoomed out. But, and by the way, we just started, unfortunately, recording these markers in the database around the 10th. So there's no historical data beyond the 10th. So you're just gonna have to kind of trust me, I guess, on this and know that that's the way. We actually got a short signal here, and I believe this one gave us a buy signal as well. But that's kind of the way it works. So it's not going to catch this one. It's not going to catch, something like this. It didn't catch here, right? There's no signal over here yet. If it looks like it might roll, the market might roll over now. It doesn't catch every turn in the market, but when it does signal, that you've got a very high probability of the market turning and catching a really good trade. And a lot of the times you can expect about a 5-to-1. So if you put like I usually put a 30-minute to 1 hour ATR stop. When you're still getting your timing, I would probably stick with 1 hour. So like the euro, I'm going to put like about a 17 pip stop on it. The pound dollar, I'd probably put like a 30 pip stop on it. And that's sort of the pain you have to be willing to eat when you're learning how to do this. Please demo trade first. Don't jump right to live trading. Don't make that mistake. But you'll find that these are very accurate. Let's go look at the pound yen that we're gonna. So here's another example, but it's not what you think, right? So if I click on this, you'll see, wait, that's PBT data. So some currency pairs have such low volatility, like the dollar CAD, the dollar Swiss, right? They just don't move aggressively enough. Even this run here didn't trigger the global trend value, right? It just didn't give us a signal. It moved too slowly, too consistently to give us an entry. So what I use for these slower pairs is I use the PBT data. And the PBT data it's designed for scalping, right? But it actually, on the slower moving pairs, it gives you a more interesting sort of entry. So let me explain how this works. So this is a -9. So it hit -9 1 times. So you would have bought it somewhere near the bottom of this wick, right? This one was a +9. I can just tell by looking at it. I didn't look at this before, but so this one would be a fade, right? So you would sell it up here and you would fade, and it looks like it moved. What are we at? 91.55. It got all the way down to 91.42. So again, about 10 pips ish on each currency pair. I wouldn't bank on that. To be safe when you're first learning how to do this, expect about 5 pips and just call it good, right? And I know that's a kind of a sketchy scenario when scalping, but I would say that's the best way to learn. Don't try to squeak 10 pips out of every trade because some trades won't get it. Here's another one. Oops, turn it off. So this was a -9 as well. It signaled, I was watching this one. It was signaled about right there. So 90.54. This one, went way more than 10 pips. Here was a fade though. And it went down. See, this one only moved about 9 pips. So when you add the spread in and stuff, 5 pips is kind of a safe way to go. And then here's one where it looked like the market was going to turn. I believe this was a -9. It was. So this one was one of those weird bounces where if you had held it, expecting it to go higher, you would have gotten burned. But it went about, let's see, I think about 22 is when it signaled, and it got as high as 34. So again, 5 pips, you're more than safe in that range. Here's another fade. All right, this one went from 98 to about 90. So that one, you're barely going to get your 5 pips out of that one. That's why I say 5 pips. It's easier to sort of calculate that. But that's kind of what the global trend value is designed to do, is catch really quick impulses in the trade, or in the market rather, and then just create a very, very short trade out of it. Now, if you go back and you turn back on all the data, you start to extrapolate, right? So the global trend value is the longer time frame. The PBT is the shortest time frame. So this would be sort of second shortest, and then these are kind of medium, right? And so you can get longer, a little bit longer trade here, a little bit longer trade here, an even longer trade here, and then the longest trade here. What's interesting is the ATR speed 2 is actually a little bit slower than the global trend value. I'll talk about that in another video, but you can use that to your advantage. For example, like in this case, when the ATR speed 2 is still above 0 in the opposite direction and you get a -9, that's going to move for you. You can get probably 20 pips out of that trade. So, but that's a more advanced way to look at it. I'll keep making more videos and kind of explaining more concepts. I don't want to make this video too long. It's already at 17 minutes. But that's the basic idea. On currency pairs where it's more volatile, remember you have to work on your timing a little bit. But so here we've got the PBT data selected as well. But let's just look at like it was kind of this weird price action last couple of days, right? So we didn't get I'm going to zoom in and then we'll scroll back in time. We didn't kind of get the bumps that we normally get, but here's a good one. I was watching this one and it went from, I think it signaled about right here actually. And you had to let it squirt a little bit. This is where I said you got to time these pound pairs. But I mean, this thing went, I don't even know how big that is, but you could have got a decent trade out of this one. So 36, 135, spot 36, it got as high as 55. So almost 20 pips of running. I think some of you, if you're US traders, you've got to deal with about a 3 pip spread on the pound yen, unfortunately. So you would have covered that and gotten 10 pips easily out of that. Here's another one. This one right at the top of the candle, it barely hit 9.9, just barely. And so you would have entered right there. If you had waited for a squirt, you would have missed the trade, which I actually did. So here's one. I would consider this a no trade, but it still moved enough to get you in and out of the trade with some pips. We go back when the market's kind of doing what it's supposed to be doing, we start to see, whoops, go back. So we start looking at these. So here's another one. It was -9, about right here. So we're at 134.77. It got all the way up to 89, right? So there's your 5 pips, easy. This one was a -9 as well. It came up, enough to get you your 10 pips. This one was a +9. It signaled +9 about right there. I was watching this one, and so we're at 135.15, gets all the way down to 134, 94. So about a 20 pip move there. So like I said, as long as you're not greedy and you're just grabbing these as quick scalps, they work out really well. This one obviously moved more than enough, right? It signaled about right here, if I remember right. Moved about 20 pips ish. This one was a stinger, right? Because I actually hit my stop on this one. It gave the signal right at the end of this candle, right? and it moved in your direction, but it gave another impulse down. It did eventually move in your direction, and it almost always does, but you have to put a stop on a trade. You're going to have losing trades. So this one, I ate my stop. And again, I put a on these, oh, I didn't talk about that, I don't think. So I put a 15-minute ATR on these scalping trades as my safety stop. Here's another one, right? It signaled a 9.9 right at the top of this candle, and it bounced. It did come down, and usually when I get to about +3 on a trade, I've learned now I just move it to break even. It's not worth it to me to hold it after that. So this one was BE for me, but if you didn't move it to break even, it would have hit your stop. This one would have played out really well. This one would have worked out okay as long as you only took 5 pips, right? And you didn't get greedy, because this one signaled about, sorry to see that wick with this stupid blue thing in the way, but this one's signaled about right here. I think we can get rid of the blue thing if we click that once. Nope, still doing it. But this one dropped about 20 pips again, so you got out of that one fine. So you're starting to see the pattern, right? Here's a losing trade, right? It was a -9. You would have got stung by this one because you would have bought it right here, right? This one was -9 right about here, and it was a gap. So this one was, to me, this was almost impossible not to take because it was -9 right here, and it just, you know, you had the gap to fill. So I pretty much knew that one was going to work. Here's another one, just a quick impulse, right? And so it's a little hairier to use on the pound pairs, which is why I chose this one. So you can see that there are losing trades if you just use random pairs. Now let's use the same exercise though. I don't know what it is about the euro dollar, but the euro dollar is just money with some of these systems. So I'm actually going to clear everything to make sure that that's all we're getting because it's the weekend. So let's zoom in to some of these. So you've got pretty tight spreads on the euro dollar, which make things a little bit easier. And this one I actually know, unfortunately, I'm not going to use that cursor because it's harder to see, but this one I know it didn't actually get to 9.9, unfortunately. Neither did this one. This was at the close of market today. So these were non-trades. This was a non-trade as well. This was a trade. So remember, you get an alert when it hits 9, right? But it never hit 9.9, so we never got it in our trade. Just the pullback to start the next candle was enough to sort of reset the PBT value, and it didn't give us our 9.9. Actually, this one did. This was a trade. This was the last trade I took on Friday. So this one got up to 9.9 right at the top of this. And again, we've got tight enough spreads on the euro dollar that we got our 5 pips out of this pretty easy. This was a -9.9. And it came all the way up. And what was interesting about this one is this flipped because this is a +9 if you look at it. So this was a weird one, right? So we're -9 here. We ride up. I probably would have taken profits before this signaled. As soon as this signaled, I immediately shorted it because it was right at the top of this wick and then came down and grabbed a quick 5 pips. Actually, I think I held this one because I thought it was going to keep going short. I got stopped out at break even. But you're starting to get the idea. So here's this one hit 9.9 about at the end of this wick. And it turned and went up. You get your 5 pips really easy. Same thing. Near the end of this wick, it quickly pulled back. 5 pips, pretty easy. This one, it went all the way to here, right? So you got your 5 pips easy. This one, 5 pips, pretty easy. Let's see, zoom out a little bit further. So we'll start looking at these. But you start to get the idea, right? Here's a fade. 5 pips, pretty easy. This one's -9, so it pulled back. Probably a break-even trade on this one. If you get to +3, move it to break even. You're probably going to get to break even on this one. This one was right at the end of this candle, hit 9.9. It almost hit my stop, but it didn't. I ended up getting my target out of it. This one was a good trade. This one was a good trade. So you kind of get if you want to start with a currency pair, I would pick one with a tighter spread like the euro dollar. It gives a lot of signals, as you can see. It still takes some patience though, because if you look at this, each one of these candles is, are we still in 1 hour? Oh yeah, we're still in 1 hour. So let's zoom out to, let's do 30 minutes. There we go. Now you get a little better view of these signals. But so this is, I don't know how many hours that is, but that's like 10 hours between signals. So it's one of those things that it forces you to sit on your hands and wait for high probability trades. and they come in runs. They don't come consistently all over the place. A lot of people talk to me about the trade signals, and they are very effective. That's what these little boxes are. Here's a buy signal. Here's a sell signal. This basic idea, but that's the general concept behind this. I'm going to call it a 2-data trade system, right? So let's turn these off again. So if I were you, I would open up the scalping matrix. I would set it up just like this. And this is all I would watch. This is almost a trade, right? The euro dollar, or euro yen rather, is at minus 9.9. As soon as it gets to 9.9, you buy it in the other direction, right? It's literally red light, green light. It's not any harder than that. Set a safety stop of a 30-minute ATR for the currency pair, right? So for the euro dollar, just say 10 pips, right? And you'll get to where you can set a much tighter stop than that later. You'll figure that out. But when you're learning, you'll realize that you need to work on your timing a little bit, so that the stop will help you not hold on to a losing trade, because you will get losing trades, right? Not every trade is a guaranteed winner. But I mean, I wasn't keeping track when we were going through that. I average, and please don't tell anybody this, because people will call bullcrap on it for one, but I also don't want to broadcast it out, because then people will read into everything I say in chat, and I don't want that either. But my win ratio is about 87%. So I'm averaging about 87% winners. And I am, for the most part, I'm just taking trades based on the idea or the concept that I take my trades off is very similar to what I've just explained to you. It's a little more advanced because I've been watching these tools a little bit longer, but the basic concept is very similar. So once you get this system down and you kind of understand it, and I apologize, this is an almost 30-minute video, but I think it was necessary to sort of explain what's going on. The basic idea is, once you understand what the metrics are doing, you can start to extrapolate all kinds of things from the data and start finding better trades, better entries, hold your trades a little bit longer, know when the market's going to consolidate and bounce, and that type of thing. So I hope this helps. Sorry, I wanted to make it a little bit shorter, but I rambled a little bit. But I will get this on the interwebs as soon as possible. And PM me on TradingView if you guys have any questions. Thanks.